Hello, this is Michael Loftus for Wealth and Wisdom TV, where education is the key to a successful financial future. This week, it's our off week, so we're going to have a short video on the market. So stay tuned. We've got quite a bit to talk about in a short period of time. Okay, so once again, we are going to have a short video this week. We're going to try and keep it under 3 minutes. So, Michelle, start the clock. All right, so first up, where are we? Last week, we've been showing this chart for some time, and we've talked about this wedge that's been forming. And when you look at it, we said that we're going to get a resolution. We're either going to break up or break down. And in fact, we broke down. We broke through this line here, so that's not exactly bullish. I think that, again, you look at futures today, and it does not look like a good start of the week. So not too much surprise here, not a lot of strength in this market. So next up, though, year to date, not a full picture, but a couple things I'm looking for here. Main thing is momentum, MACD. MACD, when we look at momentum, it's a 14-day period. And as you see by that highlighted blue area, we've had a negative crossover. So right now, what that means for clients that were sitting on cash and slowly deploying, I will be taking a pause this week. So next up from here is going to be our weekly view. And as you'll see, still below the 15-16 trend line, which is why we've got that negative signal here on the midterm view. Next up, monthly. Now this is still positive, makes sense. It's going to be a smoother chart with a monthly view. So again, the long-term picture is still very much positive and bullish. Now, overall, U.S. equities, 10 of 11 in uptrend, pretty strong. But look at international, continues to be ugly, down from 11. Just four individual international spots are up in an uptrend. So as a group, they are very much down, which also reaffirms our midterm signal as being negative. And here they are. Short term, for now, positive, negative on the midterm, and then long term are positive as well. So next up, 10s minus 2s, treasuries. They don't matter until they matter. A lot of people say, oh, this doesn't mean anything. But look at that trend. We're now down to 0.34 on 10-year treasury minus 2-year. That is called yield spread, and that is not good. When we get inverted, that is really not good. And as they say, the trend is not our friend here. So, next up, what's on our radar? Something different. Consumer staples, as you see, has been a dog. When you look here, that gray area is a death cross. The death cross is when your 50 goes over the 200-day. This has been ugly, have not been near this for quite some time. But it looks like we have found the bottom, shown a little bit of life, and I'm going to look for it here. You see this dotted line. If we get above that, I will look to possibly enter that area. So, next up, tweet of the week. All right, here we have Timothy Razor. I think I'm saying that right. Sorry, Tim, if I'm not. Tim has some great stuff out there. Good follow on Twitter. Also from Philadelphia and an Eagles fan, although I'm not sure where he lives now. But what he says, only investing do hacks and chills. Yikes. Make a plan and stay with it, or stay the course. What if you're wrong in other parts of your life? When you're wrong, you correct that course. Is that not so true? So I think this is great. It also sets up, I just finished the research on a video. Does buy and hold still work, or stay the course still work? I think it's very important, especially where we are in this markets. And the answer is, well, you're going to have to watch that video next week. So, wrapping things up, we'll see if I finished in 3 minutes. But as always, thanks so much for watching. This is Michael Loftus for Wealth and Wisdom TV.